This week marks the 8th round of the quantitative showdown between ChatGPT and Gemini. Here's what we'll cover in this video. First, we'll review the current returns and holdings of both AI simulated portfolios. Next, we'll discuss the rebalancing strategies for next week. And finally, most importantly, we'll share tips on how to design effective prompts. Make sure to watch until the end. Both portfolios started with an initial capital of $1 million. This week, the S&P 500 rose by 4%, and both the ChatGPT and Gemini portfolios also saw gains, outperforming the index. Overall, ChatGPT has achieved a cumulative return of 14%, while Gemini has done even better, reaching a cumulative return of 17%. In comparison, the S&P 500's return over the same period is 9%. Both models select stocks from the S&P 500 constituents, which means our AI-driven stock picking has delivered excess returns. Notably, Gemini achieved an 8% excess return, with its cumulative return nearly double that of the S&P 500. Next, let's take a look at the holdings of both portfolios. ChatGPT currently holds KLAC, Meta, NVDA, MSFT, NFLX, and HWM. All of these stocks are in profit, with KLAC up 14.5% and NVIDIA up 16.7%. Gemini's portfolio includes NVDA, HCA, AVGO, MSFT, RCL, and HWM. Except for HCA, all of Gemini's holdings are also profitable. Notably, NVIDIA is up 10%, Broadcom is up 15%, and RCL is up 19%. These are the stocks selected by ChatGPT and Gemini this week. As you can see, there isn't much difference between the stocks picked by the two models. The top 5 stocks chosen by GPT are NVDA, Meta, MSFT, APH, and HWM. Gemini's top 5 are RCL, NVDA, Meta, MSFT, and HWM. 4 out of the top 5 are the same. Next, we'll use the deep research features of ChatGPT and Gemini to further analyze the current market sentiment and macroeconomic environment for these stocks. Next week, ChatGPT's portfolio remains relatively stable. It has fully sold HWM, reduced its position in NVIDIA by 54 shares, and added APH as a new holding. The portfolio is also keeping 15% in cash. On the other hand, Gemini is making more significant adjustments. It has fully sold HCA, HWM, and RCL, reduced its holdings in NVIDIA and Microsoft, and added Meta, CCL, and BSX as new positions, while keeping 10% in cash. Today, I'd like to share the second step in our AI stock selection process: how to design effective prompts that help ChatGPT and Gemini build a portfolio with strong fundamentals, upward trends, and positive sentiment. In our prompts, we first provide the large language models with an overview of the trend scoring and fundamental scoring algorithms. This is because when we later give them the stock pool, each stock comes with its trend and fundamental scores. By doing this, the models can better understand how these scores are calculated, enabling them to make more informed decisions. Next, we present about 30 shortlisted stocks to the AI and guide it through 3 research steps. The first step is to have the AI perform a sentiment analysis for each stock in the pool and assign a sentiment score between 0 and 10. We start with sentiment because, for medium to short-term holding periods like 30 days, market expectations often have a greater impact on price fluctuations than fundamentals. At this stage, we specifically ask the AI to extract data from public sources such as reputable media, social platforms, and analyst conference calls, analyzing the sentiment and attention each stock is receiving. We don't just want a simple bullish or bearish judgment. Instead, we want the AI to consider multiple factors and assign a sentiment score that truly reflects the market's recognition of each stock. For example, some companies may release strong earnings reports, but if the market reaction is lukewarm and there's little discussion, they might not be suitable for a short-term strategy. On the other hand, stocks that attract a lot of attention, generate high discussion, and have positive expectations, even if their fundamentals aren't outstanding, may deliver excess returns in the short term. At the same time, we ask the AI to pay attention to what's called structural sentiment. This means it should assess whether positive sentiment is based on improving fundamentals, whether analysts are consistently optimistic, and whether the stock aligns with current industry or sector trends. Only those stocks with both positive sentiment and solid fundamentals are most likely to continue rising over the next 30 days. This dual confirmation of sentiment plus fundamentals is a crucial part of our AI-assisted trading system. Through this analysis, we can further narrow down the 30 stocks to find the best candidates for short-term trading strategies. The second step is analyzing the macroeconomic and market environment. Many people tend to skip this step in traditional investment research and jump straight into stock selection. However, the performance of individual stocks is often closely tied to the overall market trend. For example, at the end of a Federal Reserve rate hike cycle, even though inflation may be easing, economic growth is also slowing down. In such an environment, growth tech stocks and highly leveraged companies face very different market conditions. That's why, in this step, we specifically design prompts for the AI to focus on extracting and interpreting key official economic data, such as GDP growth, inflation indicators like CPI and PCE, and the Fed's interest rate decisions and statements, to ensure it has a comprehensive understanding of the macroeconomic backdrop. To make these macro data points more actionable, we also require the AI to consider the recent performance of major market indices, such as the S&P 500 and NASDAQ, to further assess current market sentiment. This analysis is crucial because it directly impacts the next step, asset allocation recommendations. For example, it helps us decide whether to increase cash holdings, reduce risk exposure, or potentially allocate more to high beta stocks. Next, we come to the core of our entire process, the third step, portfolio optimization. In this stage, the prompt is essentially structured around a constrained optimization problem. The main goal is clear. After obtaining each stock's trend score, fundamental score, sentiment score, and understanding the current macro environment, how do we select the most promising stocks and allocate positions in a way that maximizes the portfolio's return over the next 30 days, while also controlling risk? This process focuses on several key aspects. First, we define the investment universe, meaning the AI needs to construct the portfolio from both the current holdings and the newly screened stocks. At this point, it must consider their real-time market prices and existing cost bases to decide whether to hold, increase, or reduce each position. The prompt also sets a clear constraint. The final portfolio can include a maximum of 7 assets, including cash. This is designed to reflect two important principles in real-world trading: concentrated positions and flexible cash management. Too many holdings can make management complex and make it harder to take profits or cut losses, while maintaining some cash provides a buffer during market volatility and allows you to seize new opportunities. When determining the allocation for each stock, we don't just focus on short-term return potential. We require a comprehensive consideration of trend, fundamentals, and market sentiment, as well as setting stop-loss and take-profit ranges to protect capital. For example, if a stock has strong fundamentals and steady profit growth with positive sentiment, but its current price is near a historical high and technical indicators show strong resistance, it's best to be cautious and wait for a better entry point. On the other hand, if a stock's fundamentals are still improving, but it's attracting a lot of market attention and technicals indicate a short-term breakout, it may be worth a moderate allocation to capture potential short-term gains. In the final step, we ask the AI to present its recommendations in both table and text formats. The table clearly lists each stock's weight allocation, stop loss, and take profit points, allowing us to quickly grasp the overall portfolio structure. The accompanying text provides the reasoning behind each decision in natural language, making it easier for us to process and implement these recommendations. Overall, this prompt structure essentially breaks down the daily workflow of a quantitative analyst into modular steps, which are then executed by the AI. With well-defined rules and a clear logical framework, the AI not only completes the analysis but also delivers actionable results. This makes the entire decision-making process more systematic, efficient, and easier to replicate across different market environments. Finally, let me show you the full report generated by ChatGPT and Gemini using this set of prompts. The report has been uploaded to GitHub, and you can find the link in the pinned comment. Feel free to download and check it out.